love the channel and find it useful in becoming a happy retiree. Subscribe today. Hey, Joe, what's going on? How can I help?
Yes, sir. Can you hear me now?
Yes, I can.
Yes, sir. I got, like I said, about $500,000 in a savings account, just drawing no interest at all, like .00 of nothing. But I was wondering where I could put it to draw, at least 1 or 2%. I've got some money in Goldman Sachs. It gets like 1.05, which.
Oh, do you have a Goldman? When you say Goldman Sachs, are you talking about a Goldman Sachs CD?
No, sir. Just this. I don't know what you call it. It's just sitting in their bank account. Like it's a savings account, I guess. I don't know what it is.
So Joe, you've got this period of time where when the Fed had rates at zero, now they're high, a little higher than that. Money markets effectively did pay zero. Today, as the Feds raised their target date or their target rate, then now money markets, you're going to get closer to 1%. It's not that hard to find that. Again, you're going to find CDs 1.5%. You can even get to 2% on CDs, particularly if you go out a couple of years. So if you do a 5-year CD, you're looking at 2% or even maybe a little bit more than that. So no reason to not be making at least 2%. 10-year government bond pays over 2%. So there's a lot of really safe options out there where you should be getting at least a little bit of interest, right? Okay. So start asking wherever you are, start asking about, let's step things up from a 0 rate to at least a 2, maybe a 2.25 rate. And then beyond that is you're talking about being a stock-oriented investor where you have a portion of your money in equities or stocks that pay some sort of dividend. Again, you can find 3%, 4% dividends from high quality companies. Now, granted, you're going to have principal that'll fluctuate. It doesn't mean a dividend paying stock is very different than a bond. The value can go up and down tremendously. But typically, and more often than not, the dividend rate or level stays extremely consistent. And if you're looking at utility companies or telecom companies, or even some big energy companies, you can find 2.5%, 3.5%, 4% a year just in dividends. So those are some of the other areas I'd look at as you start to kind of step up money just sitting there in cash, not working for you at all. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.